Hey guys, Boris from BKT. Good to be with you again. Well, an interesting week to say the least for us. A bad bounce, no follow through in a great trade, and just an absolutely wrong call. I don't know what you would call it, but it was certainly every bad possible thing that could have happened did this week, and we were able to kind of, I think, march on with the best we could. Let's talk about bad bounces, because bad bounces happen in sports all the time. We know that a baseball can hit a pebble and go off the wrong way. A ball can hit a different angle and just simply get out of a person's hands. And this pound Swiss trade was a perfect example of a bad bounce that just happens in the market once in a while. We went short pound Swiss beginning of the week on the assumption that UK data was going to be soft, the industrial production data was going to be soft. And really the trade was going very much our way. We're basically hanging out at our numbers until Ben Bernanke surprised the whole market by going out and making a very, very hawkish pro-dollar speech. Now, the reason pound Swiss spiked up was because it's basically a carry trade, and he went out and kind of telegraphed to the market that they were going to raise rates. This was a complete surprise, in fact a big shock I think to everybody. As you can see, the market reacted violently and then came right back to its normal self because this was a knee-jerk reaction. Unfortunately, the knee-jerk reaction that took us out at our stop. Had we been able to hold on, the trade really went pretty much our way and then actually drifted all the way to T1 and beyond even before the news came out. So we were on the right side of the trade and just hit a very bad bounce, getting knocked out. The second trade we did, we were absolutely correct in our call. This was a short pound dollar trade that we did on Wednesday. Again, ahead of labor numbers, and we were very right on the call. And here's another frustrating point that sometimes happens. So we're absolutely correct on the data. We hit T1, no problems. But here's the problem. The trade has no continuation. The news was bad. There was absolutely no reason the pound should have gone up. But there was a big buyer underneath it all, and he bought everything up the moment it came down below the 95 handle and drove the price all the way back up. And it's a perfect example of how it doesn't matter whether you're right. It doesn't matter if your analytics are perfect. The first and foremost thing you do always is listen to the price. Because had we been stubborn, and basically stayed into the trade, it would have not only gone against us, but gone against us major and pushed its way all the way up. Now, here's a story that's kind of interesting. At the end of the week, the fundamentals actually do bear fruit. And as you go forward here, you can see that the pound begins to shift, and drift, and actually goes all the way below where we would have made money. But that's $1 too late, a pound too short. The point being is, you trade now, you trade what you see, you do the best you can. Then finally, the last trade of the week was just really absurdly, ridiculously, absolutely impossibly wrong. And here's the story. The data model that we use usually is extremely correct. All the data should have pointed to a stronger Australian employment numbers. But in this case, the model simply failed. And it didn't just fail, it failed so gloriously, it failed so incredibly, there's just absolutely nothing you could do. Basically, not only was Australian employment weaker, it was just ridiculously weaker. It was the first time it printed this week in about, I think, 2 years, and it was the first time in 18 months that Australian employment went down. It's a big signal. Long term, if you saw my appearance on CNBC, it tells you that I think Australian economy is probably going to be weak as we go forward. And these are the kind of things that you should pay attention to on a long-term basis. But on a short-term basis, you just take your lumps and go forward. We got the stop, we took our lumps, moved forward. We're going to look for better, more interesting trade ideas next week, and hopefully the bounces go our way. That's exactly how the markets work. You got to stay in them to win them. So the longer you stay, the more bounces hopefully go your way. I'm wishing you the best of luck. We had some really good experiences in our live trading chat this week. We're going to do more of it, of course, next month. And I invite everyone to come join us. And we may be able to release a model. For those of you who were in my live chat trading room, there may be a whole new model of trading coming in the very near term. So we look forward to seeing you at BKTraderFX.com. Boris Schlossberg, over and out.